Bitcoin sold off from 67K to 61K over the weekend due to the threat of war. And haters took full advantage by trying to paint the picture that Bitcoin isn't a store of value. We respond to the haters and dive into the reasons as to why Bitcoin might have sold off, and hopefully use this as an opportunity to educate about the market dynamics of Bitcoin in a bull market. Plus, a new Bitcoin ad drops, a UFC fighter comes out in support of sound money, and is the US going broke? We look into the data from thousands of simulations, comparing gold, treasuries, and Bitcoin. And guess what's expected to perform better a year from now? You guessed it, Bitcoin, with an average price of $144,000 per coin. It's just math. Welcome to the Bitcoin Daily Show. I'm Dante Cook, head of Swan Business. If you live in the United States, happy tax day, which is one of the craziest things if you think about it.
Hi, I'm 18 years old and this is my first time paying taxes. I really don't know what I'm doing. Can you tell me how much I owe and I'll just pay it? No, we can't do that. You have to figure out that amount for yourself. Oh, okay. Well, if I'm just a little bit off in the amount I owe, it'll be okay because it's my first time, right? Oh, no, we already know how much you owe exactly. I mean, down to the penny, but you still have to figure that out for yourself. Well, what if I get that amount wrong? You go to federal prison. What?
The global economy is between a rock and a hard place right now, as high stock values and high equity values being one of the only beacons of hope in global markets right now, as the S&P 500 sits just below its all-time highs at 5,100. But based upon the bond markets and recent action there, the stock market seems destined to take a bath. As bond yields go up, typically equities go down, and bond yields rose sharply over the weekend due to the threat of war. This typically means it's bad for stocks. But Lynn Alden makes a really good point right here. Ironically, if they crash stocks, it'll reduce tax receipts and thus increase the deficit at a time when the deficit is already unusually wide. And right now, as we're recording, the S&P 500 is getting hammered, just like your Uncle Jimmy down at the Masters this weekend. And you know what? The only reason that it wasn't getting hammered over the weekend was because it wasn't available to trade. But on to that in a second. Due to the threat of war and Bitcoin being the only 24/7, 365 globally liquid asset that trades all of the time, Bitcoin's price fell from 67K to 61K when the threat of World War III began to happen over the weekend. And Bitcoin haters took full advantage, taking digs at whether Bitcoin was a store of value because its price had just decreased. In an unsurprising tweet, one of our favorite Bitcoin haters from this show, Andrew Ross Sorkin, said he's genuinely curious to understand why the price of Bitcoin would have fallen. When he asks these questions and says that he's genuinely curious about what the responses are, he never seems to engage with all of the best and brightest minds in Bitcoin, which all reply to his tweet. Here's one of the first reasons, Andrew. In times of crisis, people sell what they have, not necessarily what they want. And as Jack Mallers points out, you can't sell the third floor of your commercial real estate building. Jack Mallers points out the true fact that Bitcoin is one of the only free and true global liquid markets that we have. And as our friend Larry predicted here, Bitcoin is a true indicator of global liquidity, and he promptly forecasted that the stock market was about to get smoked. It could just be people in Austin, Texas, who've been rug pulled by Elon Musk and Tesla, who's going to lay off 10 to 20% of their workforce, leaving real estate markets decimated. Sort of like this ghost development town right here that you see in this video. It also could be because as a society, we've developed a habit of being speculators and gamblers, led by none other than our friend Dave Portnoy, who continues to lure thousands of everyday Americans and people into gambling on sports when he posts W's like this. More technically, it could also be because Bitcoin is in an accumulation phase, right before a price discovery phase. Vijay Boyapati, author of Bullish Case for Bitcoin, dives into this narrative and framework a little more.
I think there are three kinds of price movements within a bull market. And the first I sort of call a zone of consolidation. And a zone of consolidation is this sort of price area where supply and demand basically are equal. Right now we have a price that's sort of moving between 65 and 73,000. And what's happened is we're at a price level where you have enough sellers who are attracted by these prices that they want to liquidate some. And in these zones of consolidation, you can still have pretty large price movements, right? You can have Bitcoin go up $5,000 or drop $5,000, but it sort of stays in this zone for a prolonged period of time. That's where I think we are right now. We're in a zone of consolidation. The next type of movement in a bull market is price discovery. The zones of consolidation only last as long as there are sellers who are happy to sell at that price point. And eventually you run out of supply and there's some whale who wanted to sell and they've gotten rid of everything they want to get rid of at that price point. And then there isn't really any sell side to match the demand, the organic buy side demand. And then you get into this sort of open field of price discovery where the price is basically searching for that next zone of consolidation. It's completely unclear where the next zone of consolidation is. No one knows. It could be at 80K, it could be at 90K, it could be at 100K. But you're in price discovery mode where the price starts shooting up very rapidly because there's just not enough liquidity on the supply side. And the last kind of price move inside of bull market is what I call air pockets. And what happens when you're in price discovery mode is that you have speculators on the sideline who are, they're not really organic demand, but they're just there to sort of trade in and out and juice their returns through leverage. And so what they will do is they'll start borrowing a lot so that they can make leveraged bets on Bitcoin to capture the price discovery. People get over leveraged, they get greedy, and they're like, wow, I'm making so much money, I'm going to borrow even more. And they become very sensitive to any price movements. You get a small tick down and some of these people get liquidated, and then that liquidation forces the price down more and it causes other liquidations. And all of these people who are leveraged get liquidated very quickly in a sort of cascading liquidation. That's when you get an air pocket and the price drops, say 20 or 30% in just like a few days or a week. This is the underlying dynamic that is causing these types of price moves. So when people are trying to figure out, like, why is the price suddenly going up? Why did it crash? Or why is it stuck here? That's what's kind of happening behind the scenes in terms of the actual market participants and what they're doing.
I want to draw a distinction because many people out there think Bitcoin is like a stock or one of these other bull market hype mania frenzies. It's not. It's not another GameStop, Reddit pump and dump scheme or reversion to the meme, as meme stocks are getting killed right now, proving themselves to be something that is not of value. Bitcoiners are completely different and not rational market actors. Take this for example. You figure that the people who are the smartest in the market, like Jamie Dimon or others who are selling all of their shares in their stock while the market is up right now, would also be selling their Bitcoin. But Bitcoiners and Bitcoiners who've held their Bitcoin for more than a year, well, 70% of them are not selling. Another thing, Andrew, that you might not have known, Bitcoin is the apex asset when it comes to taxes because you could sell Bitcoin and immediately buy it back. It's called tax loss harvesting. And with Bitcoin, unlike stocks or other securities, you don't incur the wash sale trading rules, which means you can capture the capital loss and apply it towards other capital gains that you've had. So maybe you have a Coco investor who's up hundreds of percent this year that wants to sell their Bitcoin when they FOMO'd in at the all-time high, now that it's at 60K, and want to capture that capital loss and apply it towards other gains that they've had, like Nvidia stock, which isn't a hype or a mania or a bubble, but I guess Bitcoin is. And you also get crazy people like this Swan customer here who bought $50,000 worth of Bitcoin through his Swan mobile app when the price dipped to 61K. And if you're a fan of sports or the Masters, I was thinking about this when I saw this guy tweet his 50K buy through the Swan mobile app. You know when you tell your boys something, but you haven't told your wife yet, and then they're over at the house and it starts to come out and you looking at them like, well, that was Neil Shipley, this year's amateur golfer at the Masters. Every year, the Masters jacket ceremony is always so weird. You have an amateur there like Neil Shipley who's just like, I don't know why I'm being here with the winner. I just shot like 35 over. But this is a hilarious clip to me. That was so crazy, bro. Man, I saw that one tweet that you bought 50K through the Swan app when the price dipped to 61K.
No, that didn't happen.
If you're a golf fan, he could have just said that he played the up and down. Saw what I did there. No, but seriously, if you want to buy 50K through your Swan mobile app, you can. And the next $10,000 of Bitcoin that you buy has no fees. Again, fee free. There's no fees on the next 10K of Bitcoin you buy, whether you are a new Swan customer or an existing Swan customer. So sign up. Get on board in just a few minutes at swan.com/app. Get your app today and get going on your Bitcoin journey. And if you have any questions, please send me an email, daily@swanbitcoin.com. You also know who's based and is a speculator? UFC 300 winner and Brazilian fighter Renato Moicano, who recommends that everybody who loves the First Amendment and property rights should go out and read Von Mises. Super based.
I love America. I love the Constitution. I love the First Amendment. I want to carry a non-fucking guns. I love property. And let me tell you something. If you care about your country, read Ludwig von Mises and the 6 lessons of the Austrian Economic School, motherfucker.
Oh, and he also wants to take his $300K in fight earnings into Bitcoin. But I digress. Why do people like a random guy on Twitter or a Brazilian fighter want to save in Bitcoin? It's because we as Bitcoiners have our eyes on the prize, and we're not faked out by these pump fakes. Let me tell you why. The Time magazine cover in 1972 asked the question, is the US going broke? And at that time, the debt to GDP ratio was at 33%. Today, it's at 121%. Inflation is through the roof. I mean, a McDonald's cheeseburger is more than double than it was just 10 years ago. Speaking of doubling, mortgage payments for homes are now double the amount that they were in just 2021. And if you look at the reverse repo markets, well, those are being depleted as banks opt in for more treasuries, swapping one thing for another. It's like money is just sloshing from left to right. It seems like the system is sort of insolvent. And it's funny because this is actually increasing the Fed's balance sheet, which it was supposed to be shrinking. Bitcoiners understand that Bitcoin buys you more goods over time and not less.
Over time, your money gets you less. Does Bitcoin? Well, in 2012, one Bitcoin bought you this much pizza. In 2016, this much pizza. In 2020, this much pizza. And in 2024, well, you get the gist. Roughly every 4 years, the future supply of Bitcoin is reduced. So historically, you get more, not less.
Because when we know when it comes down to it, the Fed and the US government only have one option, and that's to print more money. Or just admit that they were wrong and back their currency with Bitcoin. But we know that that won't happen, at least not in the near term. When Bitcoin's price crashes, Bitcoiners get dissed more than Drake right now. But Bitcoin's price always replies. It always claps back. And we keep receipts. Right now, our eyes are on the prize. And as of the time of this recording, the Bitcoin halving is just 645 blocks away. And just because it's Monday morning, Swan CIO Hafa Zaguri wakes up and runs data simulations just because. And so he ran thousands of Monte Carlo simulations through the Nakamoto portfolio, comparing gold's outcomes to treasury's outcomes and Bitcoin's outcomes. And when you look out a year from now, the price of Bitcoin on average is expected to be $144,000. But what's interesting is that the price of Bitcoin is higher than the price that it is today 77% of the time. And gold, that number was only 69% of the time. And treasuries, which is supposed to be the safest, well, that number was only 60% of the time. So Bitcoin's expected to have more positive returns, more times, and that level of return is expected to be higher. So what would you invest in? Bitcoin had an average return of 72%. Gold had an average return of 9%, and treasuries had an average return of just 3%. So you do the math. I know we always say buy Bitcoin on this show, but you don't have to trust us. Just trust the math, I guess. And with that, we're signing off for today. This is Dante Cook with Swan.com. Happy stacking.